Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists, and today we are going to talk about considering refinances. What are the benefits and considerations to take into effect if you are thinking about refinancing? So why are we bringing up refinancing here in January when rates are still, not as good as they were a year ago? And the reason why we bring up refinancing is because interest rates do go up and interest rates come down. Here at Mortgage Specialist, one of my certifications is following the trading of mortgage-backed securities in the markets every day in the morning. And we do know with recessions, as we've spoken about here in the past, rates come down as we get into a recession. And we will see that here happen again. And we like to be ahead of the curve for our clients to make sure that they're aware when is the best time to refinance. And we have clients that check in to see if they've come down yet, because we've been talking about this for 6 months now. But let's first talk about what is good. And last week we talked about the types of refinancing. And this week we're going to speak about the goods, bads, and maybe the in-betweens that we're unsure of refinancing. And the goods of a refinance, why you would want to, is generally the rate is cheaper, so your payment goes down. You can also shorten your term, again, going from a 30-year loan to a 15 or 20-year loan, so you won't have to pay your mortgage as long. And the last type of refinancing is generally getting cash back. So you can get money back in your hand to pay off higher interest accounts, finish off your basement, things like that. So many people are always excited about the pros of a refinance, but don't always consider the cons of what a refinance might not be advantageous. And generally, the negatives of a refinance is you have to pay closing costs each time you refinance your loan. And those generally can be anywhere from $2,000 to $3,000. You can roll those into your loan, obviously, but it is a cost, so your loan amount does go up. And a lot of people don't always factor that into the benefits of a refinance or why they should or should not do it. Also, how long you plan on keeping your loan. You know, if you're a first-time home buyer and you live in the house for 6 or 7 years, you might be looking at upgrading. So a refinance might not break even or benefit you as long, because you might be selling your house and upgrading to another property in a short period of time. Also, the last one is, do I qualify? Do I have enough equity? Do I have enough credit? Have I made my mortgage bills on time? And that could be the negative, is that if we go through the process of refinancing and have to order an appraisal, and there's not enough equity to do whatever kind of loan you're looking to accomplish, that could be the negative, and that could cost you money again. Not paying the full closing costs, but having to pay for an appraisal bill that's outstanding can be a negative there. So what we always do here at Mortgage Specialists is we look at the pros and the cons and educate our clients to say, okay, if we're dropping this much in interest rate, here are your closing costs. We make sure the savings benefits your financial situation. The last thing we ever want a client to do is take out a loan that they don't need. They find out later that they weren't properly educated, because here we feel financial experience and expertise is a must for our clients, and giving them the right information so they can make the best decisions for them and their family. So it all depends. A lot of people say, should I wait for an interest rate drop of 0.5% or 1% or 1.25%? What's the number that I need to be looking for in order for a refinance to make sense for me? And generally the rule of thumb through the years has always been a 1% drop, but the drop is a big difference. If you have a $50,000 loan or a $500,000 loan, it makes a difference in how much interest rate you drop. What I've seen is, obviously, the higher the loan, the less the drop. The smaller the loan size, the higher the interest rate change needs to be in order for that drop in payment to offset the closing costs. And really the simple math is this. We look at how much you're saving per month, and we look at what your closing costs are, and we generally divide those two by each other and say, okay, if you save $100 a month and closing costs are $2,000, generally we're looking at like a 20-month break even. So what you should do is, as opposed to saving that $100 per month, use that $100 and pay it down towards your loan for the first 20 months. And generally speaking, you'll be at the same spot you were by not having to pay those closing costs. Generally speaking, the math doesn't work exactly out that way, but that's one really quick rule of thumb we can go through that clients understand. We also can run 2 amortization schedules and compare the months of exactly when those balances are going to break even and cross into a line graph, and we can do that. So we can get as detailed as our clients want or as simple as our clients want. But the last piece of why you would refinance is, what is your financial goals? And not everyone's financial goals are exactly the same. Some want to save money because they're maxed out on all their bills and their accounts. Some people want to save money in a refinance so they can turn around and reinvest it. If you're refinancing, you're not doing something with that savings, it might not be a whole great situation for you, except for you feel that you've saved money. But if you're out just spending that extra $100 you saved on something frivolous that you don't get anything back for assets, refinancing might not do a whole heck of a lot for you. But if you refinance and you save $100 a month, or you refinance and pay off $30,000 in credit cards, obviously those are very impactful to take that savings and do something with it. Start your retirement plan, add more to your retirement plan, put more in your reserve fund, and being able to save that money, having that smaller payment is always nice in case of any emergencies that come up. So how we look at your mortgage is the whole financial plan, not just what can you afford, what do you qualify for, but how does the mortgage impact you, your life, and what you want to do with you and your family when it comes to your financial goals. So I hope I answered a little bit about the pros and cons today of why refinancing makes sense, why it might not make sense for you, what are the things to consider when you want to refinance, and we're always here to help answer any specific questions that you may have at 402-991-5153, or you can jump on our website at mtg-specialist.com, and we'll see you all next week. Have a great one. Thanks. Mortgage Specialists. Driven, trusted, reliable.